And I've heard you say that we're at peak inflation and peak fear. What do you mean by that? And what do you think it will take to correct or fix the inflation problem? Or will it fix itself?
Well, I think that one of the real concerning things about the inflation situation is that people feel it's all due to the Fed, and that because the Fed just started to tighten, they're way behind the curve. I would concur with that they're way behind the curve. I just don't think they're that relevant because what I see is significant policy tightening that started to take place a year ago, March,
Mhm.
across all policies. And it takes about a year before economic policies affect economic activity and inflation. And we are just now at that one year window. Just to real quick to run through these, real M2 money supply growth was 25% a year ago, March 2021. It is now zero, and slightly negative actually. Fiscal deficit to GDP ratio a year ago, March, was 18.5% stimulative spending, and now it's under 5%. That is really significant monetary and fiscal tightening. I don't care what the Fed has done or hasn't done. We've had significant monetary and fiscal tightening. The 10s to 2s yield curve a year ago, March, was 160 basis points steep, and it's now like 25 basis points, a significant flattening. And then finally, the US dollar is up 15% over the last 12 months or thereabout. If somebody told you that the Federal Reserve took money supply from 25 to zero, the federal government took fiscal stimulus from 18 and a half to under 5, they created a massive flattening of the curve and a big increase in the dollar, you'd say inflation is going to roll over. And
Mhm.
that's what I think right now. And the problem is people are looking at the Fed, and I think most of the policy tightening has already been done. The Fed's got this one little lonely interest rate we call the funds rate, which is way out of bounds with all other rates. The 1 year is already at 2%, the 2 years at 270, the 10 years at 290, the mortgage rates at 5.5. Those rates have already tightened. And so I think the Fed's going to lift the funds rate, but who cares? The tightening's already been done. And I think that leads with a 1 year lag to lower inflation.
And you touched on some great stats as well as stimulus. In your notes, you mentioned that households have roughly 1.5 trillion in excess savings not yet spent. And that figure is significantly down, roughly 4.4% from its post-COVID highs of 12.4%. With consumer confidence low, rising costs are eating away at savings, and consumers are clearly resorting to credit to fund their lifestyle. What are your thoughts on a potential credit bubble?
Hear Jim Paulson's thoughts on the potential credit bubble. Watch the full episode on seekingalpha.com. Just search for the Weekend Bite in the search bar at the top of the homepage.